Everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through a bunch of uranium stuff, show you guys how it's outperforming, how much valuation runway we've got ahead of us. I'm going to compare uranium against a lot of different things, the futures pricing and even maybe URNM, price it against other ETFs. What we want to see is an outperformance against all the other ETF or sectors. And if we see that outperformance against other sectors, it means that we are making money or making purchasing power gains against those other sectors. So that's why it's important. It also gives us an idea of maybe what the last bull market looked like, how it fell, are we bottoming, and then get you that idea of how we're coming up off the bottom. All of this is pretty important because it gives you a big picture view, and it's important to know kind of where you are in this cycle. Obviously, I think that we're very early in the cycle, and I'll show you why I think that. So let's dive in here. I'm going to give you my financial opinions about what's going on in the uranium sector from my point of view. So let's dive in. I'm going to start with uranium futures pricing. And again, we had a massive week. This is a monthly candlestick here. We go to the weeklies. This is a weekly candlestick here. This last candlestick, that's a weekly candlestick. As you can see, if you're looking from, this point onward, I'll just draw some stuff here real quick. This is a consolidation pattern. And we consolidated in this guy, going back and forth. We broke out. So one, we had a breakout. So that's important. We broke out of consolidation. Two, look at the right-hand side. We were kind of just moving, just inching up slowly and slowly. And notice we are starting to accelerate that move to the upside. So what's happening is we're getting an expansion on a week-to-week basis where money and volume and all that stuff is flowing into the markets. Here's our 24-hour volume. See the volume kicking up here? A lot more volume than we had over here. So volume kicked up. We've got that opening and closing price throughout the week really moving to the upside. If we do a big picture view, we've got a nice, good downward momentum, sideways momentum, and then we're starting to work our way on up. And we've got a long way to go higher in the physical futures price compared to where we were in 2007, which is around $140-ish. Now, when we compare the futures price to other sectors, it's going to become very apparent that this acceleration that we're getting in uranium is going to outperform a lot of the other sectors. So when we look at that, this is uranium versus silver. You can see a vast outperformance in how we are starting to gap the other commodity groups. Obviously, uranium is the spot to be with movements as large as we've got these past few weeks. And again, let's hope that momentum can continue. It doesn't mean that things go up in a straight line. But we are starting to break these basing patterns of the ratios to the upside here. And there's a long valuation runway for uranium to outperform other assets. And what we want to see is this downward movement, the basing movement, and now we're breaking out of that base to move on higher, just like that arrow on the right-hand part says. So it's happening against silver. It's happening against the S&P 500. And we could see a vast outperformance of the S&P against the S&P 500, uranium could. This is your bottoming pattern down here. You can see that we broke out and consolidated on top of that pattern. That is actually pretty common to do. And now we're starting to release from that selling pressure to the upside. And we have a long valuation runway to get back to 2007 if it were to get back there. It's not going to be completely made up of uranium. I think uranium is going to go up, but I also think the S&P 500 could go lower. And it's going to be the combination of those two things to supercharge this to the upside. Uranium versus gold. Look at that outperformance here the past few weeks. Looks like we're coming out of that base. We are also starting to break. Here, I'm going to put a horizontal line here. A little bit easier to put in here. I'm going to put it right about here. And we can see that we're basically encountering and just coming through. I call it turtle heading. Maybe it's just the tip, guys, for you guys. But it's just coming out, that tip there. And again, we got to break through here. And once we release from that, we have a long valuation runway for uranium to outperform against gold. I don't know if it's going to come back to this level there again. That level there is where uranium is 0.2 the price of gold. So if we were to do that, and I'm just going to tell you the price. So if the price of gold is 2,000, right? And it's 2,000 times 0.2, what do you think that is? $400. So $400 would be the equivalent if this were to head to this area, back to 0.2, which is right here. Other eras like the 1976 era of uranium to gold price, you don't even want to know what that gold price was. It was far higher than the 2007 in terms of uranium versus gold. I think uranium got to 100 and gold was at 120. So that was more like, we'll do the math here. It was 100 divided by 120, 0.83. So if it's times 2,000, that means it's $1,666. If the ratio were to repeat like it did in 1976, that was not in a deficit era. We are in a deficit today. Now, I'm not saying that's where the price of uranium is necessarily going to go, but one could also conclude that that is not an absolute insane price because it's done it in history before, at least that ratio of uranium to gold. Got to 0.833 or whatever it is. Uranium to crude oil, it's been holding steady against crude. This is one that I don't know if we're going to make tons of gains against, and I think these two could go up together. Uranium versus copper. I know copper's trying to break out, but uranium is definitely breaking out against copper itself, and we're breaking through this resistance level. Uranium versus nat gas. This is also outperformance of uranium, but nat gas is incredibly cheap. Now, just because something's cheap doesn't mean it can't get cheaper, and it doesn't mean that it necessarily has to perform immediately. But it is something that I would be watching, natural gas, because of how cheap it is against other assets. Uranium versus the Dow Jones. You can see that we had a nice little resistance line going across. And what happened? We're breaking away from that resistance line. So uranium is basically going to outperform everything. We also have a very big valuation runway. If this were to go back to its highs, let's see how far this needs to go. So from right where we are today to roughly somewhere up here, that is a 451% increase against Dow Jones. And remember, Dow Jones can go lower. So we should see a big outperformance against the Dow Jones, uranium. Uranium versus platinum, outperformance of just about everything is going down here. And uranium versus the M2 money supply. So this is where it was last market, was way up here versus the M2 money supply. If I were to bring this off this guy here, that's 430 or 530% roughly. So we've got 500% outperformance against Dow Jones and against the M2 money supply. Now, if I were to take URNM, I'm going to scroll down here real quick and go to URNM. URNM is the ETF. I like to price these things against other ETFs to see how the equities are performing against other equities. We're seeing a vast outperformance of URNM versus XLE. We've broken out. That looks fantastic for URNM. URNM against XOP. You can see that we are breaking out against that. that looks like we could continue higher. We're breaking out of the support region here, or resistance region, I mean, the resistance of this trend line. We've got URNM versus the commodity index. Now, I put this on here. To me, this looks like a Livermore accumulation cylinder. Kind of interesting. We've got 1, 2, 3, 4, 5, 6, 7, and it consolidated up, and now we're starting to break. When we get these types of patterns, and again, guys, I'm not like the end-all expert of Livermore continuation patterns, but generally, you'll go up and you'll consolidate, and you'll go up and you'll go to some level where it peaks out and goes lower. So this could have a vast outperformance against the commodity index. Now, remember, this doesn't mean that we just go straight higher. There's going to be pullbacks. It's not going to do it in a straight line. Just be ready for some pullbacks if it were to occur. Uranium versus OIH, the energy service sector. It is outperforming energy service sector. We had a declining wedge. It popped out of that wedge here, kind of consolidated a little bit longer, and now we're starting to get the rubber on the road. It's really starting to hook up here. URNM versus REMX, total domination. Look at that thing move, guys. Boom. Big consolidation and a big boom against REMX. URNM versus copper ETF. Big outperformance here these past few weeks. And then we have URNM versus the S&P 500. We are also starting to break out against that. So people are going to notice this, guys. This is going to be, it's not going to go unnoticed. We are definitely breaking out against a lot of different assets here, and it's not going to go unnoticed. So that's what I wanted to cover. I wanted to cover the ratios of the uranium futures pricing against a bunch of different things and the ETFs. I'm sure all of you guys know this. If you follow the uranium markets, it's been on fire. I understand that. And it's outperforming everything. That is one of the sectors that is obviously an outperformer here. Now, will that outperformance continue? I think it will. I think that we've kind of broken all these resistance lines, all these kind of spots and trend lines, kind of breaking free of everything. And that outperformance could continue. Now, does that mean it's going to continue next week? I don't know about that. Obviously, no one knows the future. I'm not a genie in the bottle, like Christina Aguilera likes to say. But I don't know. I mean, I just stay long. We've got huge valuation runways ahead of us. I don't think anybody can say that we're going to get this pullback or we're going to move up some percentage. Some people will say, well, what about price projections? Well, the projections I do are based off of the ratios that I showed you today. Those are my projections of outperformance. When the ratios or when uranium gets expensive against other assets, that's when I'm going to sell. When the market conditions are not ripe for commodities to continue to go up against other assets, that's when I sell. When we lose the tailwinds. Right now, the tailwinds are all intact, and there's nothing that I would do at this time based off of the ratios, based off of the market conditions, and the tailwinds in those market conditions. So I'm just going to remain long here, guys. It's not that it's easy to get a buying point. It's very hard to hold on to things. And when I see the valuation runways, when I see the market conditions, and that's how I've learned all this stuff, basically self-taught, I'm just going to go long. And history says that you should go long until the valuations or the market conditions change. So that's what I'm doing. Fingers crossed, everybody. Let me know what you guys think. Put it in the comments section. Love to hear your guys' opinion on this. Do you think we've got a long way to go? Do you think we're going to fizzle out here and maybe have a pullback? It's possible. I think anybody is going to have the right opinion, and we'll see who's right out in the future. Again, give me a thumbs up. Subscribe to the channel if you haven't, guys. I do a lot of updates like this. And if you guys need any help with anything, check out finding-value.com. We still have that September coupon code going on right now. It's a 50% discount for the first month of a monthly membership to try it out if you'd like. All right, guys. We'll catch you later. This is Finding Value.